Unlock investment success by exploring S&P 500 ETFs like SPI, VOO, and SPLG.
Something outside your window, maybe around your room, most likely that company or brand is part of the S&P 500. You can kind of see the S&P 500 as the honor roll students or the honor roll companies where they have proven to a lot of investors that they can actually make money year over year. These are usually the companies that have been around for a long time and have weathered through a lot of economic storms. Now, personally, I invest in an ETF that tracks the S&P 500 called SPY. However, there are a lot of different alternatives out there like VOO, SPLG, IVV, and FXAIX, which is actually a mutual fund. I personally invest in SPY because yes, it does have a higher expense ratio, but I like to sell cover calls, and SPY is the most top traded ETF in the world right now, which means that liquidity and volume is the highest. It's very easy to sell cover calls against your shares. However, if you're someone who wants to just invest for the long term, you don't really want to sell cover calls, you're not very interested in doing that, then VOO, SPLG, IVV, FXAIX, these are all other great alternatives too. And also ETFs like VOO, they have a lower expense ratio compared to something like SPY. If you're someone who says, hey, SPY and VOO, each share is kind of pricey, it's around like $500 something right now, then you can even look into something like SPLG, which is a lower cost per share. You typically want to just choose one ETF that tracks the S&P 500. It's a little bit redundant if you were to buy one share of SPY, one share of VOO, and one share of IVV. Just stick with one and add on to that position. All of these ETFs are pretty much the same thing. They track the S&P 500. They're just from different companies, okay? And that's really just it. For those of you who are visual learners, this is a chart of how well the S&P 500 has done over the past several years. On average, the S&P 500 usually gives around a 7 to 12% annual return. This doesn't mean that every year it goes up 7 to 12%. Some years it could go down 20%. Other years it could even go up 20%. But in the long term, if you were to stretch out the x-axis, the S&P 500 usually gives around 7 to 12% a year.